So thank you, Emma Osgood, for coming to talk to us here at Actuaries Digital about cyber insurance.
You're welcome.
So you've been an underwriter of cyber insurance for the last 4 years and now working at Berkshire Hathaway Specialty Insurance. Can you tell us what's happened in the market over those 4 years?
Sure. It's been an interesting time. We started from a point where the primary objective was to raise awareness of what a cyber liability policy would look like, key exposures, the key coverages for clients essentially. In the beginning, there was a lot of reluctance, I think, from companies to perhaps consider this, typically because, the focus very much is now upon saving premium rather than allocating new resources to new products. But fast forward 2, 3, and now 4 years, there's a lot of talk of breaches in the press. There's a lot more education out in the wider audience from regulatory bodies such as ASIC and APRA. Boards are really taking this cyber on board as something that they need to consider. So we're definitely at a stage now where most people are aware of what cyber liability is, but we're now sort of drilling down into the detail. So I know what cyber is, I know what my exposures are, what would a policy look like, how might it protect me as an individual against these exposures? Right.
One of the things that has driven the cyber insurance market overseas has been mandatory disclosure of cyber breaches, particularly in the US. Where are we in Australia with that kind of legislation?
That's an interesting question, and that is also something that we followed very carefully as insurers. At my previous company, we were timing the launch of our product with what we felt would be the introduction of mandatory notification. That was 4 years ago.
Right.
So really the mandatory notification bill has been on and off the political radar for the last 4 years. I'm pleased to report that in the last 12 to 18 months, there's been some significant inroads being made. A draft bill was released in December of last year, and a consultation period invited for companies to really put their views out there as to how they felt that this might play out for them.
Yeah.
I think in total 45 companies responded with thoughts, and then the coalition government came in, so things came to a bit of a standstill then. But the coalition government or cabinet rather, have requested that this bill, the mandatory notification, be passed by December the 1st this year, which is quite a tight time frame.
Yes.
In terms of what that means for companies, typically when a bill receives royal assent, there is a 12-month lead-in period. So realistically, if the bill does get passed in December of this year, it won't be until December next year that we start seeing the trickle-down effect of that bill and mandatory reporting requirements, which is great. A lot more visibility for us as individuals as to what's happening.
That's right. So it could be a very busy year for cyber insurance this year.
Yes, yeah, and you're absolutely right. The uptake in the States in terms of policy uptake was really driven by a lot of it was driven by the mandatory reporting requirements, because with the obligation to notify everybody of a breach, all of your clients, comes a cost. And if you multiply the cost by the number of clients, then typically, you can be entering millions of dollars for something that you perhaps hadn't anticipated as being an expense.
So tell me how you've gone about underwriting cyber insurance, because there is quite a few challenges, as I understand.
Absolutely. And with it being a new product area, unfortunately we don't have the benefit of years of actuarial data upon which to model, predictions as to where losses might come from. But having said that, I think that's largely irrelevant with cyber, because the way that threats are evolving, we've got on average 1 million variants of malware coming into play each day. So if you're looking at the past to predict the future, it's very difficult with cyber because the nature of threats are constantly evolving. Another real sort of difficulty, I guess, in underwriting cyber is the aggregation issue. So insurers and actuaries alike talk a lot about this, and what happens if there is a black swan incident? What does my exposure look like? And that as well is another challenge for insurers. In terms of how we're overcoming them, I know that would probably be your next question.
Yes.
We're aligning ourselves with strategic partners, companies like Symantec, who, they work in this space. They have huge visibility over attacks and threats before they really happen. So they're giving us a huge amount of insight into what trends might look like. And secondly, on the aggregation point, we're simply tracking where our exposure points are. So things like cloud service providers, payment processors. We're capturing all of this information. So should an event happen that, say, affects a financial institution, we would likely have some degree of insight as to what our maximum exposure would look like. But it is a challenge. It's a huge challenge.
That's right. Thank you very much for your time, Emma.
You're welcome.